Hi there, in this video I will walk you through an SPX put butterfly opened as a downside hedge after a very overextended rally. My name is Gery and I'm the chief options expert at TanukiTrade. The idea was to target a controlled pullback toward the 73.50 put wall below the HVL using a negative delta butterfly. As the market finally broke lower, I rolled and scaled out around key put support level, closing the trade for about $680 profit. Now let's see the recording. Right now we can see on the daily chart that SPX is kind of parabolic in the last couple of weeks, and we are doing a double top in here. And actually we are above the HVL, and the put P1, which is usually below the HVL, is gravitated towards the current market price, which means probably a higher protective put activity closer to the market. And what can also be seen on the detailed volume side is that there is a pretty high put volume further down around 7300, which is below the HVL. Right now what I'm assuming is that the market is ripe for a little correction, and that's why I'm targeting the 73.50 below HVL, the current technical support where the market bounced from previously. So that's why I wanted to have some kind of a butterfly structure for SPX on the put side. This is what I opened on Trader. This is just an analyze tab on Thinkorswim just to show you how the risk graph looks like. The spreads were costing me $9 because these are 100 width spreads targeting the 73.50, which is this area, and in the next 3 weeks. So the target price is 73.50 and it was filled for $9. And let me show you the fills from the trader account. This is the fill, $9 debit, and I can make money if the market starts to correct a little bit. And obviously the target profit is not this area because it's unrealistic to target this. But if I can make around 100% of the risk, so this amount on each and every contract, then it's a very good risk reward on a put butterfly with $100 wide or width between the legs for 3 weeks. So let's see what the market is doing. Right now I assume that it might pull back a little bit. What else we can see on the market structure map? We can see the detailed volume is pretty high. There are not much net GEX on the downside, which are put GEXs, so it's still dominating on the upside, but it can change in a day if something happens. And we can see that the 7500 is a pretty high absolute GEX level in here. So the market might make a reaction around this area, and the next big one is the 7400, then the 7000, which is pretty far below the current market price, being out of the money. So what I'm targeting is below HVL and this expiration June 18. So if the market goes to this area by this time, I can make money. So it has to come down like this. It can be very fast or it can be very slow, but it has to come somewhere here. But obviously I will not hold on to the position until the expiration, and that is why I did not want to do any kind of broken wing butterflies, because then the delta becomes pretty flat, and I wanted to have negative delta so that the position or structure makes money on the downside if there will be any downside. Who knows? This market is pretty crazy and everything is parabolic right now. That's why I thought that using some kind of a hedge for other positions would be a good idea right now. So this is the current state. I will continue from here. It's the 5th of June, and we can see on the daily chart that finally the market broke down from the overstretched level. I opened this put butterfly for the downside in this candle on this date. The market went further down and now breaking below the HVL line. So that's where we entered the negative gamma territory. And right now we are around P1 that might make a bounce. Nobody knows what will happen at P1, but this is where we have to, just watch for the momentum. And if the market continues going down, that's a confirmation that the market wants to go below P1, and it's important to check it. And also, if somebody wants to scale out from the position, these levels might be helpful. So this is what I exactly did, because after the market opened, I rolled down both of the 74.50 puts to 74.40 for 280. This was the first adjustment I did not much after the market has opened, and after that I just closed half of the remaining butterfly position around this P1, because there might be a chance that over the weekend something happens and the market bouncing back from the put wall on a Monday, and that's why I wanted to scale out a little more from the position, and this is why I closed the newly created 74.40, 73.50 and 72.50 put butterfly for 790. So in a way I created a situation where the upside risk is much lower than previously, and I still have a negative delta position with positive theta. So if the market keeps continuing going down, it's good for me, because the negative delta will create more money. So I will show you the screenshot of my fears. The 280 was the first adjustment today, and the other one was 790. So half of the position is already closed and rolled down from 74.50 to 74.40. So essentially I wanted to scale out from the position and get some money off the table, because who knows what will happen on Monday. So this is what I did today, and I will continue from here. It's the 9th of June, and we can see on the daily chart of SPX that it is testing the P1, the highest put wall on the downside, the 73.50. And I think there is a high chance that the market might bounce from this level, not only because it's a P1 and also it's a technical support, but there is also higher net volume on the upside on the call side. So I think there might be a chance that the market bounces back. But again, we have to understand that still we are below the HVL line, which is the high volatility level. We are in negative GEX zone. That's why the volatility and the moves tends to be higher. And this is the current state before the adjustment. And the last butterfly was sold for 11.30, and that's why the cumulative profit of the position is $680. And here you can see the screenshot of the fear from the live trader account, and this is the end of the position. And I just wanted to show you what would have happened if I did not do any kind of risk management in this position. And we all know that there is only one thing that you are in control of, is the risk management of the position. But if I did nothing, this position would have made around $100 or $1,500 based on a 1,800 risk, the 2 times $900. So it's almost 100% profit in a couple of days. But since I adjusted the position and scaled out from it, the final profit became $680 because of the risk management and adjustments that I did along the way. So this is the end of the position. I hope you liked it and gained some insights from it. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.